call, Brendan Burns.
Thank you, Mr Speaker. I'm very pleased to take a call on the first reading of the Insurance Prudential Supervision Bill. I'm to acknowledge the comments of the member proceeding that the world has indeed changed in the last 18 months, and those who maybe at the beginning of last year might still have believed that the market was God, and anybody who talked about the need for rules and regulations was talking the devil's talk, I think may now accept that the market does need rules and regulations. The markets of the world, the financial markets, have been brought to their knees in the last 18 months, and that underlines the need for appropriate regulations such as implemented by this bill. Labor will be supporting this bill to a select committee. I presume it may be to the Finance and Expenditure Committee. That's for the House to decide, but if so, as a member of that committee, I'd look forward to looking at this bill in more detail. It is a sensible bill establishing the need for monetary policy and Reserve Bank powers, and we will be looking at the needs of it in terms of a prudential regulatory framework for the insurance industry. In doing so, the bill does give a number of powers to the Reserve Bank to carry out its new role. But sadly, this bill does not go as far as it might. It goes nowhere towards dealing with the issues, one of the key, in fact, economic issues facing our nation presently, and that's the issue of monetary policy. We are looking again on Thursday at the Reserve Bank and whether it might move on interest rates, and we have no certainty about these issues. And the bill should be giving the Reserve Bank some more powers so it is able to be more flexible than it is in implementing current monetary policy. And yes, indeed, Labor does believe that we do need as a nation to improve our export performance. It is our lifeblood, as the cliche so often goes, but it is important to give exporters certainty. And exporters such as the Manufacturers and Exporters Association, headquartered in my electorate of Christchurch Central, are 100% behind the comments of Phil Goff in a recent speech that we do need to review the Reserve Bank's approach to monetary policy because it is doing nothing to assist our export sector and to grow the economy of this nation and give it some sustainability that's so important into our future. We do, as a party, Labor, want to see New Zealand lift its economic performance and to lift our incomes so we can all do better. To do that, we must look at monetary policy. It is not set in stone. It is not working in the interests of this nation. Everybody but the national government seems to believe that that is now the case. And I think that when we have the Prime Minister asserting that he will defend the status quo on monetary policy, he is really defending something that is truly indefensible. The status quo is not delivering for New Zealand when our dollar is stretching through to 73 cents to 74 cents American, when it was 50 cents at the start of the year. How on earth can our exporters be competing in a market where they're 50% more expensive than at the start of the year? And it's the volatility of the dollar underpinned by our current monetary policy which causes the problems for exporters. They could survive if they knew where the dollar might be over a time period, but the fact that it rages from one end of the spectrum to the other across a short time frame causes them immense damage, and there are estimates that for every 1 cent dollar movement we experience, 1 cent in the dollar movement, it costs this country $100 million in lost export opportunities. So we are supportive of this bill, as it does address the need for some regulation across the insurance industry, and that's highly appropriate. The bill is going to require insurers to obtain a licence, having met the criteria for eligibility. It's going to require them to maintain appropriate solvency, to obtain and publish financial strength ratings, so we get some sort of sense of where the insurance companies are on the spectrum of financial strength, to meet fit and proper standards for directors and relevant officers. We've seen within the wider financial industry the capacity for directors not to be appropriate and for strange practices to take place. We want to see under the bill the requirement for insurance companies to have a risk management program. Obviously, they're managing funds. They do need to be giving assurance to those people who take out insurance policies with them that they are appropriately going to manage the potential for upside and downside risk. To appoint an actuary, another requirement, key provision of the bill, and obviously to prepare annual financial condition reports and 6-monthly financial statements, so those watching the insurance industry will be able to get some assessment of the relative strength of the insurance companies. The main areas being brought through in the bill include the licensing of insurers to see that there is a consistent set of minimum standards met by all insurers, and obviously they must obtain a licence. Once that is granted, then they're able to be monitored against those standards, and this then reduces the need for consumers to be having to make complex inquiries to be assured about the strength of a particular insurance company. And that's been one of the things we've observed with the collapse of many finance companies over the last couple of years. Consumers have had a devil's time trying to work out whether their particular financial company is kosher, is strong, is going to survive the market downturn, and often they don't find out until it's too late, and their money goes down the gurgler when, if there'd been appropriate financial regulation, they may have been able to have had at least some signals of the strength of that particular company. So good to see these provisions introduced for the insurance industry. One of the other main areas the bill is introducing is the need that they will have to be licensed before the bill comes into place. We're not doing this in any rapid time provision. It is estimated that there will be an 18-month lead time for the insurance company to meet those requirements to get licensed and covered by the ambits of this bill. One of the other key provisions of the bill will be around capital adequacy and solvency standards. That truly is going to be an essential element of the legislation. Obviously, an insurance company needs to give assurance to the market that it has the reserves, it can meet the tests that apply in market situations from time to time. And obviously, overall, overseeing all of this will be the Reserve Bank. It will require financial information from the insurance companies, and potentially the public also will have access to that should they have the need to assess in greater detail. And I think the background to the bill really comes down to the need to ensure we have a sound insurance sector, in the same way as we're now beginning to contemplate changes to financial companies. We need to know that when one is taking out policies, when one is having investments with an insurance company, that has the capacity to endure through the blips that happen across financial markets on a fairly regular basis. New Zealand's insurance industry is known to be sound. Generally, there are no signals of distress, and that's very important. That's one of the good things across the New Zealand financial market, that although we've had 20 or so smaller financial companies implode, we have obviously some stability across the banking sector more generally, and the insurance companies have certainly contributed to that. But I think they recognise, and certainly the Parliament is now recognising, that we do need to have assurance on these issues. We can't just put our faith and trust and hope. We need to know, as a country, as a nation of investors, that the insurance industry will endure the regular storms that happen on the financial markets. In the lead up to the bill, there have been extensive consultations. That's been appropriate. No doubt those will continue through the Select Committee process. That is also important, and I am pleased to be able to support the bill to the House today.